So we're going to take a look at the futures market for the NASDAQ 100. This is /NQ. So before I get into this video, please, if you could do me a favor, join my Discord. That link is down in the description box below. Also subscribe to my channel as I do drop multiple videos a day. I'm trying to get to 1,000 subscribers before the end of the year. I know it's a little bit of a stretch, but it would really help me out, and I would highly appreciate it if you could hit that subscribe button. Also, give me a thumbs up when you're done watching this video. But all eyes are going to be on the CPI data that comes out tomorrow, 8:30 Eastern, 5:30 Pacific Standard Time. I think the whole market is going to be having this data and these numbers on high alert. We could be in for, you know, some of the biggest inflation we've seen since Ronald Reagan in the 80s, which is not going to be good for the overall stock market. So you can see here, we're coming off of highs 16,767. This is going all the way back to the 22nd of November. Then we had this big long drop here, starting with that whole Black Friday sale day after Thanksgiving. Not a lot of volume there, not a lot of people there to protect prices, so they really escalated that. And then last Friday as well, we had that big downtick. So I've got a couple of levels marked out here. Right now, you can see this top line here, this 60, and these numbers are not going to be to the exact dollar, to the exact penny, but overall, just in general ranges. Okay. You can see here, this trend line that I have drawn here, this 16,450 area has been a tough area for us to break in the past. You can see going back to the beginning of November here, 1, 2 times, 3 times, and then we kind of cracked down. This only bit of stretch that we really started to take this out, you know, the end of November, realistically from the 18th till about the 23rd, in this range where we kind of cracked above it, put in that little blow off top, and then came crashing down, tested it again another time here for the 3rd time, 4th time, 5th time, and then today even we came up to this level, tried to test it, and immediately was rejected, and we kind of sold off. It's to be expected. Of course, a lot of people are de-risking their position sizing and their positions going into tomorrow, just so they don't get caught with the shoe on the wrong foot. So you can see here in the after hours, we're currently kind of holding this little level here. This little level here in this gray box that I have highlighted has acted as a previous level of support quite a few times. 1, 2, 3, 4, and then right now 5 times. So this is a pretty stable level, but anything can change come tomorrow. So with that being said, if you see an initial spike higher, okay, if we get this initial ramp up into pre-market and we come up here into this 16.2, even 16.3 area, and then we get a little bit of rejection and we do come back into this zone and we start to lose this 50-day moving average on the 4-hour time frame. This is what I'm kind of looking at here. We start to lose this 50-day moving average here. We do have room to slide into that 1600. And that 1600 is going to be very, very critical, because if we do start to break that 1600 and start to build below, and the market doesn't like the data, and the numbers are, you know, astronomical, like to be expected, we could be coming down here. You can see this gray box that I have down here at around this 15.5, 15.4. Let's just call it between 15.4 and 15.6 area. We came down here, double tagged it 1 day, 2 days here, and then got that big, massive rally just a couple of days ago in the stock market. So what we're going to be really focusing on here is, for one, this 16.1 level, 1600 and $1,600 level here, this gray box. And if we start to lose that, it's not going to be good for the market. It could send the volatility index into a spike. There could be a lot of fear in the market, and people could start to be unloading their positions, as you know, they're in fear of the Fed reacting a little bit quicker to this inflation, and that can cause a little bit of a correction in a lot of stocks. You know, we've currently been seeing a correction, especially in the small cap stocks. Tech stocks have been holding up, you know, very, very strong at all-time highs. I mean, if you just take a look at Apple alone, it seems like Apple is holding this whole market up, you know, by a thread. If Apple was to pull back even 2-3%, what would that do to the overall market as a whole? I mean, that's yet to be told and yet to see. So we definitely have to keep an eye on this critical level here. The only thing I'm a little worried about here is if we do start to pop up a little bit in this range, this could just very well be forming a bull flag. And then when the data comes out, we crack below, bear flag, and we crack below this bear flag and start treading our way to the downside. But what happens if we get back down in here to this level where we kind of tagged it 1-2 times here? Do we continue to hold that and tread sideways for the day, or do we lose that level? If we lose this level tomorrow, okay, time to panic a little bit, especially if you're holding some long positions, because this very well, any close below this double bottom here could be the start of sending us into a correction, especially on the tech stocks that have been the high flyers as of late. So with that being said, everybody's eyes are going to be on this inflation CPI numbers tomorrow. It's going to be very, very huge. The main thing I can say is if you're a new or inexperienced trader and you've never been through something like this, a lot of us haven't, some of us have in the past, definitely size down. Definitely, you're looking to take cash flow moves only. You don't really want to get caught holding the bag on either side if you're a short, if you're a long. But this is going to be a very, very critical level here, just even going into the overnight trading session, because if we do lose this zone, say we come down in here and we lose this zone and kind of just consolidate here, any kind of pop here could immediately be rejected around this level, consolidate sideways, and then come crashing down. So, the best case scenario for the bulls and the best case scenario for us in the stock market is to kind of, hold this level a little bit and the numbers be better than expected, so we can kind of surge past this 16,450 area. And if we can get any close above this 16,450 area, I would expect next week to back test up and down, a lot of chop, just being the fact that we have options expiration next Friday, as well as FOMC meeting. So we could very well see a lot of chop going into next week. And as soon as we get out of next week, then see that next leg higher at these all-time highs. That would be the best case scenario. But again, it's to be determined. So definitely I'm going to probably be on probably have a live stream up, as well as be on voice chat tomorrow in the Discord. So if you're not a member of the Discord, completely free to join, go ahead and join that down below. And if you're also new and you're looking for a trading strategy, you're new to trading, you're new to scalping, check out my course, evolutiontraders.com. You can see all the information there, and I'll be more than happy to help you out. But until next time, guys, I will see you guys all in the morning.